It's going to turn out to be a happy and busy Tuesday for the China markets, you think, tomorrow?
Oh, they're certainly busy, and we're interested to see who you're going to have around this time tomorrow, because always we have the announcement, so it's going to be a very interesting time to be talking about developments. But what a past few weeks it has been for China. And the way that I've...
have you been able to take it all in?
Still taking things in, and there's a lot of debate also backing the team. There's constant debate and sort of a nice sort of diverging lens of views. But I mean, the way that I've been thinking about China, essentially, it's almost been a three-act from China policymakers. Act number one, it's been about monetary policy, and that's the bit that they've been able to move faster, because essentially we've had the Fed that has now eased, and also we've had a renminbi that's been stronger, and that has meant that China has eventually managed to do a bit more on the monetary policy side. It's not enough. Monetary policy standalone, when the market has been having confidence issues, has been deflationary sort of concerns, monetary policy standalone, especially given where M1 does not suffice. But it's important because it can help with a multiplier effect when the other acts come together. Act number two, it's been about the stock market. It's a bit more about liquidity and reforms in the stock market, because especially, we had the measures announced a couple of weeks ago coming into the long holiday and the market rallying. That can create confidence, and that can create a wealth effect that has been very much challenged on the back of what's been going on in the property for a long time. As we all know, China, property, wealth effect, that's been what we've always known for the past 10 years in China. If some of that can be, some excitement, we can see some excitement on the back of that coming from the property, from the stock market, that's a good thing. Act number three is fiscal. That is by far the most important one. You guys have been talking about that. Everyone's been talking about that. And the question is, how big is it going to be? And I have to, just one more last thing here. I've been a little bit surprised by the fact that it's been announced sort of this early, because I was thinking it's something that we're going to see around US election time, because, keep the powder dry, right? Be able to know what the damage is, and then be able to act on it. There's clearly willingness to act, but it's about having the patience and understanding how big that needs to be.
Yeah, I hear what you're saying, and I suppose the timeline for that would be that the fiscal policy, if something is announced this week, and we do hear from the Ministry of Finance as to confirming some of those reports about 2 trillion RMB in government bonds, etc., then we do know that it does need to be rubber stamped by the NPC, which would happen at the end of the month, which arguably would then start to filter through the system around the time of that US election, and then we'll start to see, I suppose, the transmission. So for the markets, Act 1, 2 and 3, when's the standing ovation?
The standing ovation is essentially when fiscal surprise on the upside. What the number has to be, it's a very tricky, it's a very difficult question. Is it the 2 trillion? Maybe that's not even enough. Maybe it has to be more than, or maybe it's a 2 trillion plus being open-ended with more to come, because China has issues around confidence. Confidence continues to be at rock bottom. Confidence at a level which we have not seen, essentially never really recovered post sort of lockdown a few years back. That needs to change. Households in China have been saving because they've had concerns around the negative wealth element from the property side. They've had concerns about household income. And that needs to change, and they need to see something more sustainable on the fiscal side. I think if we see confidence onshore in China improving, that will lead to better earnings, and that's the key. The standing ovation is when earnings start to improving, because so far it's been a multiples-driven rally. It's been essentially a sentiment-driven, liquidity-driven rally. I think we've probably seen the bulk of that. I think the biggest of the numbers are behind us on that front. Is it 80%, 90%? Who knows? But I think the bulk of that trade is behind us. Now it's about fundamentals, and fundamentals means earnings.